This is Money Exchange with Andrew Barnett.
Good evening and welcome to Money Exchange, Australia's first dedicated currency program. I'm Andrew Barnett. I'll be your host each week as we cover all the major headlines and stories that drive currency markets. So if you're a trader, a traveller, a business owner or just someone who's eager to know what global currencies are doing, then Money Exchange is just the program for you. Well, what a week it's been for global currency markets, with price volatility on most major currencies matching what we saw back in 2008 during the global financial crisis. Tonight on the program, we'll first cross to London, the currency capital of the world, to speak to Zachary Latif to find out what big money is potentially going to do next. We'll also chat with a man who may know a thing or two about currencies. His company's been making substantial global payments for more than 36 years. And I'll share with you my top 5 golden currency trading rules, as well as show you how to keep up to date with the latest trading technology. Plus, we'll be answering your currency questions live on the show. You can email me directly right now via andrew@moneyexchangetv.com. Let's kick things off by taking a look at this week's currency headlines. The case for a US rate hike in September is now less compelling, according to a top US Federal Reserve policymaker, as economic turmoil in China has spread to global financial markets. New York Fed President William Dudley says China's economic slowdown, falling commodity prices and financial market volatility have increased the downside risk to the US economic growth. Mr. Dudley, who's a voting member of the FOMC, says he still hopes the US central bank can raise interest rates by the end of the year. It comes as some leading US economists call on the US Fed not to go through with a rate hike next month, given recent global market woes. Well, after a roller coaster week for China, the Shanghai Composite has extended yesterday's rally to hit a season peak. It comes as the central bank was forced to step in once again as the country tries to prevent its financial markets from going into freefall. The People's Bank of China cut interest rates for the 5th time in 9 months after stocks in Shanghai plunged again. The central bank also increased the amount of money available for lending by reducing the reserves banks are required to hold. Analysts say while China's actions to cut rates may calm stock markets for now, the country faces a long period of uncertainty. On Tuesday, all eyes will be focused on the Reserve Bank of Australia as the bank hands down its September decision on interest rates. Majority of economists expect rates to remain at 2%. August's meeting saw the central bank keep rates on hold as expected, but change the wording around the Australian dollar, previously saying the local unit needed to depreciate, but now says it's adjusted to significant falls in commodity prices. It's time to discuss where some of the big money flow is likely heading in the FX market, and for that, senior foreign exchange dealer at AFEX, David Green. David, thanks for joining us on Money Exchange.
G'day, thanks Andrew.
Mate, tell me, right now we've obviously seen a big depreciation on the Aussie dollar.
Yep.
As a trader, I'm keen to ask someone who's dealing in the big business of global currency transactions, is there any major need, want, desire for anyone to hold the Aussie dollar right now?
Yeah, no, it's a pretty good question. I mean, I think I think where we're at the moment in terms of the Aussie, economically, I think our fundamentals are probably just a little bit off where they need to be, and that's, I think, realistically reflected in I think, say, the demand on the Aussie dollar. I think the questions around, certainly from a yield perspective, obviously interest rates are still a little bit higher than the US and probably our major counterparts. So in terms of that, then from a yield play, then yeah, it's probably not a bad option to hold Aussie dollars. Going forward though, what's the outlook for the economy? I think it was pretty interesting to hear what Governor Stevens said during the week, where he essentially turned around to the market and said, well, whilst he didn't mention specifically the currency as such, a concerning part for me was raised concerns around where growth was going to come from to get us back in line with trends. So obviously the RBA sees this as being below trend for the short to medium term, which is, I think, in line with expectations and probably what the data would tell us. Yep. And in terms of, I suppose, why you would hold the Aussie dollars, given the yield advantage for the short term, I think it's a good question to ask.
So with your clients at the moment, big business, and them forward purchasing their currency transactions for the next 12 months or so, what are they saying to you, or what is your advice to them, and what are they doing at the moment? Because obviously as a currency trader myself, I'm keen to know what big money is doing. Are they expecting the Aussie dollar to be, say, in the 60s to the US by this time next year?
Yeah, look, I think sort of the recent depreciation's probably caught a few people by surprise, particularly the ferocity of it. So there's certainly been a lot of volatility. I think for Aussie businesses, this time is generally seen as being a pretty good time in terms of budgeting and forecasting and that sort of stuff to look for calendar year next year. In terms of what we're seeing, though, we are seeing, I suppose, as a business, we do an annual currency review from globally. So it's probably an opportunity time to talk about this sort of thing. So we found that Australian businesses, so local SMEs, lower corporates, our clients, are seemingly more prudential in terms of managing their foreign currency exposures compared to our global counterparts. So around 45% of our clients use hedging products. So in terms of what they're seeing for next year, we're seeing an uptake in I suppose, slightly more sophisticated products. So a lot of businesses now are starting to introduce optionality. So from a mindset perspective, a lot of people are taking cover, taking some insurance over the next 12 months. So certainly there's the perception that the Aussie is going to fall a bit lower, and I think we're probably all in line with that. In terms of a bounce, the Aussie's a resilient beast. We both know that. Generally, year on year, we see around I generally say about a 15 cent range. The question that a lot of people are asking us now, though, is where's the Aussie in that range? I think I would be a very brave person to say it's at the bottom.
I noticed in some notes this afternoon that you had that we're likely going to see an interest rate hike in the US this year, maybe not in September, perhaps maybe in December. And you noted that you thought that might actually be positive for the Aussie dollar. A lot of traders are thinking with that interest rate differential narrowing, it might be negative for the Aussie. Is that because your view is that so many people are overweight, short being on the Aussie dollar, that we might see that bounce?
Yeah, potentially. Yeah, I do. Look, I think so. I suppose from what I've seen in the past, and it's probably my personal view of it at the moment, or just the way that the Aussie reacts. It can be quite interesting when, I suppose, the weight of expectation is on something huge, and if that comes to fruition, then the Aussie dollar reacts. I think like a similar, albeit comparative to the US liftoff, was our rate cut, our previous rate cut back in May. And now the market had forecast that was almost a foregone conclusion. That's right. It come 2:30 on that Tuesday afternoon. The Aussie rallied 40, 50, 60 points on the back of it.
I think there's a lesson in that for all the novice traders out there. Don't be in the trade that seems to be the most popular trade at the
That's
time.
Right. Don't follow the herd.
Same for the stocks. Now, China's obviously been in the headlines a lot recently, and the markets in China and the People's Bank of China are gradually opening things up there. Are you seeing a bigger demand for the local currency there by businesses?
In terms of, let's say, the flows that we see, we're seeing, I suppose, a steady increase. It wouldn't be an increase that I would say is huge. It's not really catching us off guard. In terms of where we are seeing a big increase, I think, is the interest around the opportunities in China. So certainly, I suppose, the opening up of the trade barriers to enter into China, the accessibility of the local currency. Certainly ourselves, we're partnering with the New South Wales Business Chamber in an effort to be able to, I suppose, allow businesses to enter into the Chinese market. I suppose on the back of the upcoming free trade agreement.
Let's get to a couple of questions, because at this show of the time, this is the time on the show each week, we're going to take a couple of currency questions from the viewers. Now, we've got an email from Mark in Perth, and he asks, what are the chances of the Aussie dollar going back to $1 to the US anytime soon? Well, Buckley's a none for me, but what about you, David?
I would have to agree with you there. I think in terms of the Aussie dollar going back to parity against the US, I can't see that happening for a long time.
Yeah, I think we're probably going to see that interest rate differential narrow and maybe go lower.
Maybe hold out on your trip.
Exactly. And Simon from Melbourne asks, the Aussie dollar was close to 1-for-1 against the Kiwi recently. Why has it gone back to 110?
Yeah.
What are your thoughts?
Well, I think that's a great question. It was a really interesting move, I think, from predominantly the strength in the Kiwi it almost countered the weakness in the Aussie as well. So it was a perfect storm for that.
We saw those
frost.
interest rates come down in New Zealand, and that's really, it's probably it's not so much been Aussie dollar strength, it's been Kiwi weakness, isn't it?
Absolutely Kiwi weakness. So there was a lot of momentum on the Kiwi side of things at the same time as the Aussie dollar was being sold off quite heavily towards the start of the year, and obviously now that's ceased. And certainly the rhetoric from Governor Wheeler and the rest of the RBNZ is that they're going to hold firm on any interest rate hikes, certainly for the short to medium term. So that's probably why we've seen it come back up a little bit.
And any chance of the Aussie going back to parity against the Kiwi anytime soon, do you think?
Oh, I would think that would be a little bit doubtful.
Okay.
Yeah. I just think where New Zealand is at the moment, I think they're probably on par with us from an economic perspective. I think I would be a little bit concerned about is their reliance on dairy, on that sector, and what's going on in China. So obviously that has a fair weighting on the dairy price. So I think that there's a little bit of concern around sort of the risk associated with New Zealand at the moment.
David, thanks so much for your time. I really appreciate it.
Thanks.
We're going to take a short break. We'll be back in a moment.
What do you want from your car insurance?
We want a 15% discount.
15%?
Yeah, 15%.
You want up to 15% off?
And prompt settlement on our claims and easy application.
Search Real Car Insurance now.
Knowledge applied is power. Incredible things are created with the right knowledge. Knowledge also breeds foresight, giving strength to manage risk and make better decisions. When you choose to trade Forex with Go Markets, you'll gain access to our foresight and expert market analysis. Analysis that could help you identify potential financial risks and wait for the right opportunities. Go Markets, your first choice for Forex.
Look what I got today.
What is it?
It's new.
Ooh.
Teasers.
Oh, I want one. Who's that?
That's Tom. He's new too.
New teasers. Little pieces of Maltesers immersed in smooth milk chocolate.
Check out these great value Father's Day gifts, all under $20.
Hortex Bypass Lopper, only $14.98. Two Trees Hammock, $19.95. Soft Cooler, just $12.95.
Lowest prices are just the beginning.
Introducing new Delta Metro from King Living. No matter what the occasion, you can rearrange Delta Metro to suit your ever-changing lifestyle. With adjustable comfort, changing looks, discreet storage and smart options, why buy an ordinary sofa when you can come home to new Delta Metro from only $1,995 at King Living? Design sale on now.
Now making your money work harder for you, this is Sky News Money.
Money Exchange is brought to you by Go Markets, your first choice for Forex.
Welcome back to Money Exchange. We saw a strong rally on the euro early this week when stock markets hit the skids. Many of us came to the conclusion it was more US dollar weakness rather than euro strength. To get some analysis, Zachary Latif from TLG Capital in London is joining me now. Zachary, thanks so much for your time. I'm eager to hear your thoughts about what the euro's been up to this week and where you think it's going next.
Well, Money Exchange is brought to you by Go Markets, your first choice for Forex.
What are your thoughts, Zachary?
Hi, Andrew. My thoughts on where euro is, I think I'm in agreement with pretty much market consensus. It is more of a dollar weakness. We've seen some very strong rallies in the euro simply because in the past 6 months, the US dollar has been increasing relative to all currencies and especially the euro. So it's sort of a mini correction at the moment for the dollar, and also it's also a flight to safety concept as well. A lot of the commodity currencies are under pressure at the moment, so they are trying to go towards the eurozone.
It's interesting
and towards
you say
the euro currency in
It's interesting you say flight to safety with the euro. So at the moment, and I say that simply because of the economic turmoil with Greece and what's been going on in Europe in the last few years, but getting back to the fundamentals of the euro at the moment, do you think that the recent rally up is a good opportunity for traders to maybe get short with potentially an overvalued euro in the current market conditions?
Yes, I think the euro, I mean, just to make a distinction between where the currency is going and where the economy is going, while I'm very bullish on the Eurozone economy, I think eventually the euro currency itself is going to be weakening because of the stimulus pressures by the ECB and the fact that the Eurozone and the Fed are on different rate cycle movements. Eventually, even if the Fed delays its rate hike, it is going to go into a more tightening stimulus. So therefore, the euro dollar is going to weaken, maybe not immediately. Maybe we're going to have to revise our forecasts from weakening in the immediate short term towards more of the longer short term towards the end of this year. But the euro, I am bearish on the euro, especially against the dollar.
So we've seen a little bit of weakness, obviously, in China's economy recently, and China is Europe's biggest trading partner and vice versa, Europe being the biggest economy in the world as a region. How much longer do you think it's going to take, or how long do you think it will take for that economic weakness to flow through to Europe? Because I can't imagine it's going to be helpful for Europe.
Well, I think it's a more multifaceted answer. For instance, Europe's largest economy, like Germany as an example, was powered more by domestic consumption than export-led growth in the last year. I think also with regards to China, the depreciation of the RMB actually poses more of a threat for, say, Japan, which competes with China on many of the same export-led segments. So I think what's interesting about the euro and the Eurozone in general is that we've had such a spectacular news outflow regarding that region that now it's kind of hard to believe that some good news is actually coming out of it. And I would discount the idea of a China downturn having too much of an impact on ECB. Obviously, if we see something like a sustained and huge China crash, that is going to have ramifications for the Eurozone, but it's very hard to think what a China crash won't have ramifications on unless you have absolute flight to safety like gold, like dollar, and those sort of risk-off assets. But I'm very, very bullish on where the Eurozone is going. We are seeing a stimulus program. We have seen Greece tied up as well. So it's all good going as of this moment for where the economy is going and for euro stocks. For euro currency, we have to just see this as a sort of bull blip at this moment in time. It's, maybe not against other currencies. I think the euro is still going to be, rallying against most other currencies except for the dollar and the sterling.
Zachary, do you think that the ECB is going to be forced to have to extend that stimulus program beyond September next year and print more money, therefore devaluing the euro even further?
Absolutely. I think that we're still not out of the zone for the Eurozone. As an example, in the US, we've seen higher than expected growth averages. Growth in the Eurozone as a whole is still pretty much anemic. The peripheral economies need this sort of sustained and consolidated help from the ECB. We need to see government and government debt being bought at a sustained basis to make sure that there's a prop to the market for that entire sector. So the stimulus program is very much on. It's probably going to be extended for another cycle, for another market cycle at least, which does give the economy the boost that it needs to remain competitive and to remain compelling from an investor and risk asset perspective.
Zachary, I really appreciate your time today. Thanks so much.
Thank you.
We're going to take a short break. Don't go away, because after the break, I'll share with you my top 5 golden currency trading rules and how to ensure you keep up to date with the latest currency trading technology.
Knowledge applied is power. Incredible things are created with the right knowledge. Knowledge also breeds foresight, getting strength to manage risk and make better decisions. When you choose to trade Forex with Go Markets, you'll gain access to our foresight and expert market analysis. Analysis that could help you identify potential financial risks and wait for the right opportunities. Go Markets, your first choice for Forex.
A gift card is a great idea because you can give it to your father and they can do anything they want with it.
DeWalt drill driver, only $199. Power cap beanie, $24.98. LED torch, just $7.87.
Lowest prices are just the beginning.
You know, there's a school of thought that says advertising only exists to make sales. And that's the way AdAd sees things. AdAd is Australia's leading performance TV advertising agency. That means they create TV ads that people respond to immediately. TV campaigns for clients who want their phones to ring. TV advertising for businesses who want their websites hit hard. TV ads that make sales instantly. And believe it or not, many of AdAd's clients only pay when they get the result they want. That's right. AdAd pay for all the advertising. You only pay for leads or sales or whatever result you're after. It's 100% performance-based, no catches. So if you believe that advertising exists to make sales and you only want to pay for TV advertising that works, then there is only one agency to talk to, AdAd. Go to adad.com.au now.
Now making your money work harder for you, this is Sky News Money.
Money Exchange is brought to you by Go Markets, your first choice for Forex.
Welcome back to Money Exchange. Over the years as a currency trader, we mostly learn our mistakes the hard way, but there are some golden rules that we do our best never to break. And tonight on the program, I'm going to share with you my top 5 golden rules for currency trading. Now, the number one golden rule for any trader, whether it's currencies, whether it's stocks, whether it's options, commodities, you name it, of course, is managing risk. And it's so important that when you are an independent trader as a business owner or whether as a trader, investor, whatever it might be, that managing risk is your number one priority because everybody thinks about the upside. But you've got to focus on the downside, guys, because big losses come from living in hope. And there's a lot of people out there that invest in markets, invest in currency markets that just simply don't enjoy or can't handle realizing a loss. So you must know where your exit point is, and you must know what this represents as a percentage of your account. So it's so important that you manage your risk appropriately and you know when you enter a position, whatever it is, where is your exit point? All right, so point number 2. In the currency markets, and this program is dedicated to currency markets, we're going to be focusing on interest rates. Nothing moves currencies more than interest rate expectations. We've seen it over the last few years with the US Fed. Haven't raised rates yet, but look what the US dollar's done. The Bank of England, what has the pound done? It's skyrocketed in value in the last 2 or 3 years. The Bank of England haven't even raised rates in 6 or 7 years. And of course, we've seen what's happened to the Aussie dollar with expectation and rate cuts from the RBA here in Australia. So central banks will tell you where currencies are likely headed over the medium term. Now, here's a big tip. Big money is always going to be looking around 6 to 9 months out. So watch what central banks are doing with interest rates. Number 3, never exit a position based on emotion. And you've seen it in the last week. Markets have been driven predominantly based on emotion and emotion only. Fear and greed. Now, every time you enter a position and exit a position, it has to be with logic and there has to be a valid reason why you're exiting the trade. It can't be an emotional reason because the market's moving against you. Your stop loss is going to be there to take you out if you've got one, and you've got to have one. And most traders self-sabotage what is a valid trade often because they are trading emotionally. Just play the numbers game. We are playing a probability-based game. Number 4, and this is a really important one as well. You've got to win big occasionally. Don't cut profit short to make yourself feel good. And so many people do that to realise a profit, make themselves feel good, and then their losses always exceed what their winning trades are. You've got to be a detective. Find good value. It's not about how many times you're right or wrong. And this is a quote by George Soros, one of the most influential investors in the world. It's not about how many times you're right and wrong. It's about how much you win when you're right and how little you lose when you're wrong. Number 5, don't expect perfect. Perfect in financial markets doesn't exist. As we've seen recently, everything in your life you can have a degree of influence virtually. In financial markets, expect the unexpected. You don't know where the market's going next. Not many leading professional traders do. They play the probability-based game. So that's my top 5 golden rules I try to live by as a currency trader, and I think you should as well. Now, one of the great ways in which you can keep up to date with what interest rates are doing is by using some of the latest trading technology. Now, you can use iPhones, you can use tablet devices, of course you can use your desktop or your laptop computer, but I can tell you now, you don't have to be at your computer all the time. Now, what we're going to do now is put up onto the screen what is typical today of a mobile device that we can use in financial markets. And mobile devices are great because, for me, what gives me the information flow. And you can see there on the screen now, there's an iPad and an iPhone. It could be a Samsung. It could be any of the latest devices. And these devices help you keep up to date with information, but remember, professional traders use a mouse and a keyboard. Market information flow needs to be at your fingertips. That's what you should be using your market devices for, your phones and your iPads. Now, before we wrap up the show tonight, the winner of our currency quiz question from last week was Peter Bannister, who correctly answered the pound as being the oldest currency in the world, still being used today. Peter, the world's coolest USB stick is on the way. You can keep up to date with all my currency predictions and tips by simply going to moneyexchangetv.com and registering to join me live in the market every Monday night at my trading desk. That's moneyexchangetv.com. That's all we have time for this week. Thanks for your company. Bye for now.